Enough of watching your investments blindly ride the indexes up one day, down the next with zero real strategy. Stop white-knuckling through every market swing, simply hoping for the best. The team at RockLinc Investment Partners builds resilient, high-conviction portfolios using a strict value investing discipline, strong fundamentals, durable business models, and attractive valuation. We ignore fads and focus only on companies built to protect and grow your wealth responsibly for years to come. Take control today. Contact us at 905-631-5462 or info@rocklink.com. That's link with a C. And we're back. Our final segment of this Monday, July 13th. Jonathan Wellum, CEO of RockLinc, joining us. Always great discussion around money, geopolitics. Jonathan, welcome to the show.
Great to be back with you, Mark. And yes, to talk about what's going on out there in the world in the area of finance.
Oil is standing out like a sore thumb today.
Yeah.
It's up almost 9% to $77.81. Now, it is interesting because what Trump is saying is that he can actually take control of the Strait of Hormuz. Obviously, the Iranians say, no, you can't. But he says, oh, no, we can do that, and we can charge a 20% charge on levy on people going through the Strait. So he wanted free travel with the container traffic through the Strait when Iran was still in charge. But now I think he's rethinking the idea, thinking, yeah, we could make a lot of money just basically being the guardians of the Strait. But I guess the market is not taking much solace in what Trump is saying, because here it is now, oil going up again. And sadly, that is bound to translate into higher gas prices, which really I think is the only weapon that Iran has left. Them, of course, the Democrat Party, which is rooting for higher gas prices too, I'm sure. What do you think?
Yeah, there's no question. The price is up almost 10% today, and it's in response to the uncertainty in the Strait of Hormuz. I think Trump just loves throwing out different ideas and just getting to see how the market responds. But if he's going to have all his military there, and he's going to be the one that's guaranteeing the free passage of those ships, and I do think that they largely control it. They don't control it completely because you got these one-offs that they can send missiles and so on, but they're not very organized and controlled, and they're continuing to do damage. The U.S. that is, in terms of the missile launchers, the small boats that they have that run around, their high-speed boats. So I think his point is, listen, if the rest of the world isn't going to help out, why don't we charge a 20% fee? We've got to recoup some of our costs for our military. So I think it's a brilliant idea for him to throw out while they continue to protect the Strait. But no question, the response in the market is going to be, okay, we're going to have to put the price up because that will increase the cost for energy there. Meanwhile, the Strait's becoming less relevant over time, but that's going to take a lot more time. But there is less and less need for the Strait, which I think is great. And the leverage for the Iranians continues to decrease month by month.
That's right, because there's a pipeline going through Saudi Arabia. Unfortunately, I think it's at capacity. I can't remember the number of barrels that it's able to put out a day, 800,000 or 900,000 comes to mind. But that pipeline needs to be doubled and quadrupled. So it goes out through a different waterway. And people are looking more and more at alternatives, which, if there's a silver lining out of all of this, it's that people realize we can't have this sort of extortion happening year after year. And there's got to be a way to limit as much as possible the amount of oil that countries are reliant on going through the Strait of Hormuz. Elsewhere in the markets, we're seeing the Nasdaq getting not quite shellacked. It's down to 1.6%, which is 427 points. So tech stocks are taking a bit of a beating today, including SpaceX, which is down to $135. So this is down. There was obviously an initial frenzy during the IPO, the initial public offering, and a lot of people got caught up in it. Now they're looking and saying some red ink there. because it's down $90 from its peak. And that's quite a decline. But for those of us who believe in Elon Musk and think that the way forward, not only on the space element of this stock, but as you mentioned in the run up to the interview, there are other companies that are also associated with SpaceX, including Starlink, which has done very well and continues to. I guess they're paying the groceries with that one, aren't they?
It does. That's profitable business. It continues to grow at a steady basis. In fact, in full disclosure, I just got sick of using my Cogeco at my house, which is very erratic, and I just signed up for Starlink. So I hope to put that on my roof in the next week and to get more dependability out of my internet connection. But they're used by other companies to launch satellites. They have almost a monopolistic position in terms of a number of their space businesses. They have the AI data centers that could be up in the space and so on. There's a number of initiatives that Musk is going about that some of them are a little farther fetched, maybe farther afield, others are not. So I think that if you're going to look at SpaceX, just be patient. I think with the passing number of months, a couple of months, there'll be more and more shares that'll become unlocked. In other words, if you went in as an early investor, when they did the initial public offering, the IPO, a lot of those investors could not sell. So they had a very small float. Only 4 to 5% of the actual stock is trading in the market. But over the next couple of months, more and more stock is going to come on the market. And a lot of that stock was purchased at really low prices, like way back. And so it's inevitable people want to take some profit. So that'll increase the float, increase the shares that can be traded in the market. And so you could see that thing drift down to $100. So if you want to own the stock, be very careful, dollar cost average, be patient, don't put your whole wad in, please don't be leveraging. It's going to be volatile. But if you're committed over the next 3 to 5 years, Elon Musk is a hard guy to, you don't want to short him and you don't want to bet against him. He's a brilliant entrepreneur and he's got some great ideas and he's got some businesses in there that have a lot of growth potential. Just be patient, be careful, dollar cost average, just don't get carried away.
Yeah, it's the robotics industry that's going to show some real growth, I can imagine. My understanding is the robots that they're building, a huge chunk of them are going towards the Tesla side of the operation. Obviously, there's still different companies, although there has been some talk about merging the two.
Yeah.
But you're building robots, and before they're available for commercial use, you're gonna move them into the automotive side of the operation to build Tesla cars, which I think makes sense. It's not great for the people who are employed because they could very well find that their jobs are simply phased out over time. But if you got robots building those things and they're smart enough to do that, then how far are we before we're looking at robots that are available on a retail basis where you and I could get something that will fold our laundry, wash the dishes, that sort of thing. If anybody's going to be spearheading that movement, it'll be a guy like Musk. You know what I mean? And
yeah, and that is one of the reasons why Tesla, the robotics division, is basically buried in the Tesla stock and along with the cars. And that's one of the reasons why people are pretty optimistic. The robotics is an area that seems to be a fair bit of growth. I'm not sure as much growth as Musk talks about. He says everyone might have a robot at home and maybe a couple, but it doesn't matter. Even if it's much lower rate of growth, it's still massive scale. And they're talking about putting those companies together. I think that could make a lot of sense over time. And if they did put those companies together, you'd have about 5 or 6 different businesses that are really unique, have a lot of growth potential, and are run by one of the best entrepreneurs in the world. And he's proven that he can do an end run around most other companies. And so that could make it a powerful combination. Again, be careful. There's a lot of these companies are still embryonic. They're growing quickly, but they're still off a low revenue base. And so when you're talking trillions of market value, there's still a lot of growth that has to take place to justify those valuations. So just be careful, as they say, dollar cost average, if you are interested in it, and please don't be using leverage.
let's talk about Carney's first year, specifically GDP. Canada's real GDP was slightly lower after Mark Carney's first year as Prime Minister than when he took office, making it the weakest first-year GDP performance for a new Canadian Prime Minister since at least 1963, according to analysis based on historical GDP comparisons the media general, as you would expect, has come to his rescue, saying it's not fair, just like they're saying the recession is only a technical recession. It's not real, it's just fake. But the reality is something different. Canadians are feeling it.
Oh, yeah.
Aren't they? And the rest of the world knows full well that our GDP per capita has shrunk now. I believe it's lower than that of Alabama's.
Yes. Yeah, and I think as we've talked about in the previous episodes, Ontario, which was, had the golden horseshoe, this powerful economy, you go back 30, 40 years, had a higher GDP, or higher slightly, and equivalent with New York State, which had Wall Street. So Ontario is amazing. Now Ontario is slipped down to practically Mississippi level. Yeah, it's the slide in wealth production and wealth creation in Canada, and in certainly some of our large provinces, is shocking. It's absolutely shocking. And that's because of the massive increase in socialism and state involvement in the size of the state and taxation and regulations, which is just really strangling the private sector. And there's no other way you can put it. And the GDP, as you point out, if you look at it on a per capita basis, which you have to look at as per capita basis, we've brought in so many new people into Canada that you've seen that number actually shrink. And on top of that, I would argue that you have to adjust by inflation. And if you believe that their inflation numbers are understating real inflation, which I think all of us do, when you talk about CPI going up 2 and 3%, I think the reality is CPI has gone up more like 4, 5, 6% per year the last number of years. That means they're overstating GDP by an even higher number because they always adjust it by inflation rates. So yeah, it's a bleak picture in Canada. And that all goes back to lack of investment funds. We are not getting the capital invested in our core industries, and we're losing and hollowing out our manufacturing base as a lot of that money goes to the United States.
And the trade element, of course, obviously still so much uncertainty around that. And now we see, I don't know if you caught it, but the whole bridge issue now that the Trump said, we're not going to allow this thing to open unless you give us some concessions. And they ended up doing a 50-50 split on the tolls, which some people look at Carney and say, oh, what are you doing? What a terrible deal. We built the thing, cost us $6.4 billion. And now you're saying that we got to split revenues with the United States. But I think, that's a deal that you make when you really are playing, when you have no cards to play. That's what I thought when I heard about that. I said, that's the mark of a guy who has no cards to play. What did you think about that?
Absolutely. I wouldn't go as far as say we have no cards to play, but our cards are few. They're few. And when you irritate and you aggravate the United States, particularly the Trump administration, it's put us in a terrible position. So our negotiation and our skills to negotiate and have leverage have gone down significantly. And the reality is the United States is a massive economy. We do have some great resources that they would like to have, they need. But at the end of the day, what are we going to do? Shut down our oil going to the United States? We need that revenue. Are we going to shut down the uranium that they are buying from us from Chemical and so forth in Saskatchewan? No, of course not. We need to sell that to them. And so the leverage that they have, it just goes up more and more when we irritate them and we treat them with disrespect. And I think that, again, the whole relationship, the way we've negotiated has been just a horrible, terrible negotiation skills. Instead of playing to how can we work together? How can we partner together? How can we continue to leverage our skills? How can we be fairer in some of the tariffs that we have, especially in our food industry? But it's never gone that way. We've used them as leverage to try to win votes, and they know that, and so they're going to play hardball. And playing hardball against the United States is a losing cause for Canada.
Yeah, as we just found out with this bridge thing, because I think Trump said, I'm not going to approve the opening of this thing. It's supposed to open July 27th. You've built it all on borrowed money. You're desperate to generate revenues, but I'm not moving. So this is what I want. And Carney kind of said, okay, we need money. We need to open up that bridge after having spent all this money building it. We need to generate revenues from it and pay for the thing. And so I think Trump had them from the start and knew it. He would be a tough guy to negotiate with. And so I'm not surprised that he.
Particularly when you're insulting him and you're doing little grandstanding speeches over in Davos about middle countries and so forth. So we've done everything but in poking them in the eye repetitively. It makes no sense. Instead of, Mark, and you'd sit down and go, okay, let's look at the whole relationship. Let's start to figure out where we can work together, where we have strengths, where you have strengths, where we have weaknesses, where we can leverage them. The one area, even the military spending, we've underspent our military. We've been completely and utterly defended and dependent on the United States, right? They're the ones that ultimately would defend us if we had anything serious happen. And we don't pay for that. And Trump is quite right. We've been living off of them. So again, he puts that price tag on the dome. He says that that's going to be like $61 billion. And so again, instead of working with them and saying, how can we, as we expand our military and beef it up a little bit, how can we buy things from the U.S. and improve our trade negotiations and leverage the military establishment in the United States and all of the weapons that they create? No, we go over to Germany and we start buying submarines and things from Germany. It's crazy. We should be focusing on how we can establish better relationships, and every dollar we spend, if we can do it in the States and build a better relationship and keep the tariffs at zero, that's going to be the way we're going to leverage our economy.
Jonathan Wellum, RockLinc.com, RockLinc.com. Thank you so much, Jonathan. Got to bail before they kick me off.
Okay. Thanks, Mark.
Tomorrow. Have a great day. Bye-bye for now.